The market is panicking about one of America's most iconic brands, and that panic is creating an opportunity for dividend investors. The brand is Kenvue, the maker of Listerine, Band-Aid, and Tylenol. The stock has been absolutely hammered by a Tylenol rumor, and frankly, I think it's been blown way out of proportion. But savvy investors know that irrational fear moving a share price can create a buying opportunity. So what is this rumor that made the market forget that Kenvue sells way more than Tylenol? And how is it a perfect example of using investor sentiment to create a buying opportunity? Kenvue was created in 2023 when Johnson & Johnson spun off its consumer health divisions. The new structure was intended to streamline operations and increase revenue growth. So right off the bat, we knew there would be a transformational period and volatility in the stock price. But I did not expect the 14.5% slide that we've seen so far in 2025. Now, some of this slide was warranted. Activist investors have been collecting shares and pushing for change. So it wasn't a surprise when we saw 1/3 of its leadership being changed out in the second quarter. Management admits that the company has a self-induced complexity that needs to be fixed. However, after the second quarter earnings call, shares were just a penny lower than they started this year. The real slide happened after the Wall Street Journal rumored that RFK would blame autism on Tylenol use in pregnant women and in infants. The rumored report or any data supporting these claims have yet to be released, but shares slid all the way down to $18. The erasure of gains due to the second quarter earnings was warranted. This last slide, due to rumors, not so much. For the sake of argument, we could assume the rumors are true, and even then, we're only looking at Tylenol usage in a small portion of the population. It's not uncommon for medications to be contraindicated for pregnancy use or for children under a certain age. Now, don't get me wrong, Kenvue is in for a volatile 12 months, but you could be collecting a 4.5% yield through it all. There are two ways to look at the situation. First, you could add more shares today because I liked shares at $21, so why wouldn't I like them at $18? Tylenol is just one of the company's 41 best-selling brands. If you were already viewing Kenvue as a long-term holding, grab those shares at a better price. The second way you could play this is to add Kenvue to your watch list. As soon as you see the reversal of investor sentiment, then you grab your shares while they're back on the way to recovery. The difference would be you could miss out on a few of those dividend payments. I think Kenvue is a company that we could hold for many years to come, so I'll be using a combination of the two, adding a few shares now, and then a few when I see the reversal of that sentiment. So when it comes to investing, don't forget that irrationality could be your best friend, especially when it's somebody else's.